do now have Jim Rogers back with us. Jim, my apologies. Technology failed us just as we were putting the first question to you, and that is that this is a historic deal. What impact do you see this having on crude prices in the near term, if at all?
Well, it's already had an impact. Whether it's a real deal or not is irrelevant. It's having an impact right now, but the 15th, it's going to have an impact. My first reaction is, Iran has been selling its oil. They may not have been selling it to the West, but they have been selling their oil. So this is not going to be much of a new supply on the market. But psychologically, it's clear that the oil markets were ready for a correction. This has given them an excuse for a correction, and so it's in process. I guess that we will probably hit some kind of bottom if we have panic selling. That usually means we're getting towards a bottom, and it looks like there's panic selling.
Jim, hi, good afternoon. You've always maintained that there's excess supply of oil right now. Do you think this could be the catalyst of a 6 to 7 month decline or a substantially long decline in crude prices?
Oh, gosh, you know I'm not that smart. You know I'm a terrible market timer. You know I'm the world's worst short-term trader. You should watch your network. That's how you can find out whether this is 6 days or 6 years. I would suspect it's going to be a short and sweet because the market will realize that while it's a nice psychological threat, the reality is Iran's been selling most of its oil anyway. The Chinese and the Russians and the smugglers will buy all the oil Iran wants to sell.
Well, Jim, India's on that list as well. But just to add to that argument that you're making, that this could be a very short-term negative reaction in terms of a decline in crude oil prices, do you expect that the OPEC will respond to any potential opening up of further supplies from Iran over the medium term by a short-term cut in supplies? For instance, Saudi's been pumping out more crude than, the OPEC likes it too. Do you see the Saudi pulling back on supplies at all in the near term?
Well, whether it's the Saudis or not, someone at OPEC will get together and say, hey, wait, we've got to do something, because all of OPEC, they have not had great oil prices for a few years now, and they haven't cut back their spending. They're all spending a lot of money, so they need to keep the price up. They will take some action. I don't know who or what or when, but I know they will take some action or announce some action in an effort to get the price back, especially if it collapses some more. And it looks like, you all have many charts there at your network. It looks like it's going to have a nice little drop here for a while, and that may be the bottom that will galvanize OPEC into action.
Jim, the other issue that I wanted to discuss with you is what's been happening in China with the reforms last week and what that might mean for base metal prices going forward.
Well, I'm excited by what happened. The Chinese had an exciting announcement in 1978 and in 1993. They say that this announcement is to be as significant and as exciting as what happened previously in those 2 years. So far, what I have seen, that's correct. Some sectors of the Chinese economy are going to benefit enormously. And as you all know, if you can find a government that's going to spend a lot of money or give a lot of incentives to a sector, you should put your money into that sector too. So the Chinese are clear that they're going to do something about railroads, about healthcare, agriculture, pollution. They've made it pretty clear they're going to do something. So I would suggest that people read what they said and then try to find some stocks in those areas.
And Jim, where do you stand on dollar now amidst all this developments on what's happened globally? Where do you stand on dollar currently? Because in the past you have been bearish on dollar. Would that position stand?
Oh no, well at times I have been. No, I've owned the dollar for a while now. Mainly I own the dollar because I expect more currency. Not that I'm optimistic about the dollar. The dollar is a very flawed currency with serious long-term problems. But I expect more problems in the currency markets. And when that happens, many people will flee to the U.S. dollar as a safe haven. It is not a safe haven, but since people think it is, they will go there, and I own the U.S. dollar, at least at the moment. I don't know. I may own it for a week, a month, a year. I may sell it 2 years from now. I don't know, because it is definitely a problem of currency with serious problems long term.
Jim, you've been a critic of the U.S. Fed's policies. Do you have now a timeline for when you would expect the tapering or the normalization of Fed policy to begin, and really what impact that will have on emerging markets like India?
I'm glad that I've made myself clear about the Federal Reserve. I'm glad you understand. Whatever happens, first of all, Ms. Yellen is very keen on printing money. She's taught Bernanke, and she was very much behind the scenes in this money printing, so she's not likely to stop. If and when they do start slowing down, the markets will probably go down a lot. She will get scared. All of them will get scared because they're bureaucrats. They're not, they're not very smart people, so they will get scared and they will start printing again. So I don't see the Japanese are not going to stop. The Americans are not going to stop. The English are not. The Europeans have said we will do whatever it takes. So I don't see anything stopping this until eventually the market just says we're not going to take it anymore, and then there'll be a crisis. And then the market may force them to stop. But no, I don't see any permanent or serious end of tapering until the market forces them to. There may be temporary attempts at it, but these people are going to panic when things start dropping a lot.
Jim, are you buying anything in India? I mean, is Indian stock market appealing to you?
No, I'm still not buying anything in India. I would like to. I constantly think, gosh, if the Indians could just get it together, it could be a fabulous place to invest, as you've heard me say before. I'm still a critic, however, and if your government would ever open up your markets, then I'm sure I and others would be if you would open your financial markets, your currency, then there might be people who would invest, including me. But in the meantime, I'm looking at China right now, China and Russia, because what's happening in China, as I said, the Chinese market's down a lot from its all-time high. The Chinese have said we're going to take dramatic actions. Well, I believe them. They usually, when they say they're going to do something dramatic, they do. They follow through.
All right, Jim, appreciate you finding the time to speak with us. Thank you very much for your insights on a variety of different things, including that historic preliminary deal signed by Iran. That's Jim Rogers, a globally well-known investor and one that has a view on different aspects of the markets, including equities and currency.